Okay, guys, kind of change of a pace here, but preparing you for the fourth part of the final project, which is technical analysis, and that's going to be involved in your elevator pitch. I'll explain a little bit more of that in the Zoom today, but I thought I'd put together a video of explaining how to calculate some trend lines. So if we look back from quite a while ago, like a month ago, the trend line, the downtrend line from when we started to sell off, it was pretty pronounced, but every time we got to the trend line, we sold off and made a lower low. And eventually, March 23rd appeared to be the low, and we hit a low of 222.95. 222.95. Now, we rallied past the trend line and then accelerated. You see a lot of volume of a lot of buying. I don't know if that was buying to own or buying to cover. It could have been a combination of the both, but we rallied off the lows, hit a peak, and then started to settle into a new uptrend. So really the one I'm focusing on right here is the bottom trend line right here. And that seems to be, as long as we close above that line, it looks like we will continue to go up. Now, realize the damage that's been done to the economy. It's hard to imagine that we're returning to pre-crisis highs of, like, let's say 338. And that's going to be a number we're going to come back to later when we calculate our Fibonacci retracement. But let's take a look at the points that kind of clue us in to the bottom in the SPY. So March 23rd, we hit a low of 222.95. So I have an Excel spreadsheet set up. You're going to be working in Google Sheets. It was a lot easier for me to toggle back and forth. So I'm going to use 222.95 as the low. Okay. Now, if we come back to our next low, I wasn't really sure where the trend was. We were bouncing around, going up and down, but this looks like a clear low in the week, and that was on 421. We hit 273.04. 273.04. Now, what I'd like to do is calculate the slope. So we're going to look for the difference between the higher low and the lower low, and that looks like a change of $50. Okay, let me just highlight these for a second. Change these to dollars. Now, what we'd like to figure out is the change in days. So how many days from the 21st to the 23rd? It looks like 29 days. So that means our slope, our rise over run, is going to equal the number of, or the change, the rise, divided by the number of days. That looks like we have a slope. We're going up $1.73 per day in the SPY. Okay, I should have made a note of this. This is the SPY ETF, which tracks to the S&P 500. Now, we want to forecast this into the future, and today is April 30th. Okay. I'll change that. Sorry, I'm doing this on the laptop instead of the desktop, and this is not as easy. Okay, so we'd like to know where we're going to be on the 30th, which is today, to stay above the trend line. So let's figure out how many days have passed from the last known low to today, and that was a difference of 9 days. Now, take 9 days times your slope. That's going to be how much we've changed from the last known low. That's going to put us at our target date today. So we want to take the last known low and add to it change in the line. So that takes us to 288.95. 288.95. Let's look back at the graph. It looks like we're above it right now. So 293.21. Looks like we're holding 293.21. 293.21 is what we're currently holding at. I'm sorry, I don't have much organization here, but if I were to buy today, that price, I have about $4.62 worth of risk. Okay, I would buy hoping that we continue higher and maybe go back to our old high of 338, which is not likely, but I have $4 of risk right here. Now, I would sell if we break below this line. Now, it's actually really bad. If you, I did have some buys on the 23rd. I made incremental sells as we've been running. I'm going to be flattening whatever I put on the 23rd by the time we get towards this number, and I'll explain more of my get out point, which I'll calculate. I think it's around 294. But there's something called a Fibonacci retracement. Fibonacci retracement is basically how far did we fall, and then how much are we bouncing. Okay, so if we look at our peak of 338, 338.34. Okay, let's come back here. I'm going to do our retracement. We had a high of 338.34. We hit a low of 222.95. And that was a total change or total drop of $115.39. Okay, so that was quite a drop. Percentage wise, that's pretty substantial. But let's talk about the bounce back off the low. So some people call 50% retracement, which means you take the drop of 115.39 and you would take 50% of it and add it back to the low. Now that's where I'd be. I really was taking some incremental sales, but I will be totally flat by the time we get to what we call the Fibonacci. All right, so this is actually the golden ratio conjugate is 0.618033. This is an irrational number, it goes on forever, but I'm just going to use that as our value. You can Google golden ratio conjugate. It's 1 over phi. I'm not going to get into the mathematics there, but it's the sum of an infinite series. Now, what we're going to do here is take the amount we dropped and multiply it by the Fibonacci retracement. That's a $71.31 needs to be added back to the low. So if I take the low of 222.95, add it back, that means a 61.8% bounce off the low takes us to 294.26, and you can see we are almost there. One more update and it gets us there, but it wouldn't be a bad idea to make your sales before we get to that number. A lot of people are going to be watching that number. Although the one thing about this market is it's algorithmic driven, so the software programs actually will buy more at higher prices and sell more at lower prices. As a trader, you can take advantage of the overcorrections in the market.